time, brown bag time. We have Tyler from Hiring Solved. He's going to share with us a little bit about Bitcoin and arbitrage. So let's give it up for Tyler, and let me remind you that if you need to make phone calls during this next few minutes, if you could use the back rooms for that, or have conversations if you absolutely must. You can dip back there for those. That'd be awesome. So we can all learn from Tyler.
Hello, my fellow humans. I recently, a few months ago, a project hit Hacker News by this guy named Butor. He built a Bitcoin arbitrage bot in C++. So I thought it'd be interesting to implement it in Python just to get a better understanding of the Bitcoin exchanges, the cryptocurrency exchanges, and how arbitrage works. So a little bit about myself. I work for Hiring Solved here out of the Gangplank, as do many other people. About the project itself, I decided to make it more general than just trading Bitcoin. So it trades Bitcoin, Ethereum, Litecoin, and you can also add other arbitrary cryptocurrencies that are implemented by different exchanges. Currently, I only have GDAX and Kraken exchanges implemented, but I built an abstract base class so that you can implement your own exchanges eventually. Do any of you guys have familiarity with Bitcoin trading or Ethereum or anything?
I do.
What's your experience with it?
I've just bought it. I've never.
Yeah. Well, this project allows you to step aside from the trades, and it trades for you based on arbitrage opportunities. And what arbitrage is let's say you have a market A and a market B, and you're selling chickens. And in market A, chickens are going for $3, and in market B, they're going for $8. So an arbitrage opportunity exists between and you would profit $5 per chicken. Now, this is similar in Bitcoin and Ethereum markets because
We got it back. Sorry. Talking about the chickens again.
Oh, okay. So the chickens, let's say in Chandler, are being sold for $3, and in Tempe are being sold for $8. So you could buy them in Chandler for $3 and go drive to Tempe and sell them for $8 and profit $5 a piece. Now, the same thing exists in the Bitcoin cryptocurrency markets because liquidity isn't there, execution times aren't there, many other reasons. Adoption, for example, by institutional investors, high frequency trading, for example. So this opportunity arises. So what you can do is, for example, between GDAX and Kraken, let's say Ethereum's being traded at $200 in GDAX and $300 in Kraken. What you would do is you would short sell Kraken at $300, and you would buy long on GDAX. And then what you do is you're now risk neutral. You've hedged your position in such a way that if Bitcoin, or Ethereum in this case, moves up or down, you don't really care about that. You care about that spread converging so that the prices are equal, and you make up that spread. So what this arbitrage bot does is it monitors the exchanges by polling. Currently, GDAX only has the WebSocket. Kraken doesn't, so I'm just polling right now about every 10 seconds. And basically, as soon as an arbitrage opportunity arises, it will execute the trade. It will buy on the lower priced exchange and then short sell on the higher price exchange. And then eventually it will close out that position when the spreads have converged. So,
is that traded up high?
Yeah, traded up high. Yeah, so that has all the trade logic in it. According to the original project I kind of based this off of, the author, he said he was generating about 25% returns per year, which is, it's a risk-free trade because you're just capturing spreads between prices. Risk-free, I mean, you look at LTCM, you know, that's not really risk-free anymore. It's current. Well, right now I'm paper trading with it. It has two settings: you can paper trade or you can live trade, and it's just a simple flag like live, and you're good to go. So.
But based on your paper trading, what would you have for?
Well, like I said, I just put it up this morning, and according to the original author's like experiment, yeah, it trades about 3 to 4 times a month. So it's very, very low frequency, and trades usually last, you know, spread usually lasts, you know, anywhere for, you know, an hour to a few days. And what's interesting is I kind of took his lead, or like his, you know, results, and kind of modified them. He has like a hard stop time with trades, whereas you know, I'm using a decay function, so I have an initial minimum profit for my trades that I'm willing to accept. And as time goes on, I'm willing to take less and less profit, you know, just to get out, because time value of money. You know, there's other opportunities out there that probably result in bigger yields. So that's pretty much the only difference. I mean, besides being more general and being able to trade across different cryptocurrencies, and that's about it.
So when I opened TraderUp, I lost your audio a little bit.
Oh.
Can you explain again a little bit about what you were talking about with the different things you tried, and why you chose to do it the way you did?
Yeah, sure. So there's 2 arbitrage trading methods for cryptocurrency. You know, similar to the chicken example, you could drive from market A to market B, which in this case for cryptocurrencies, you'd be transferring your money across different wallets. But the problem with that is the transaction time and confirmation time. And in that time, you're subject to market movements, and that could be very substantial during volatile periods. You know, we saw recently, like a week ago, where Ethereum and Bitcoin and Litecoin just dropped, you know, 10 to 20% within a day, and that's huge, especially when you're only making potentially 25% a year. So I decided that method isn't that viable, and instead went with Bootor's method, which is buying long and basically capturing a spread between 2 exchanges by buying and short selling. You had a question?
I did, yeah. In the stock market, there's rules and regulations and limitations around the frequency of trading, and then your taxes based on the frequency of the trading.
Right.
Is this essentially unregulated since it's Bitcoin?
You know, I'm not entirely sure about that, because I believe GDAX is registered with the SIPC or somebody. So basically you have to pay taxes on your trades, short-term capital gains. And since this isn't a long-term strategy like buy and hold for more than a year, you would be subject to, you know, short-term capital gains. I believe. I haven't been trading a year yet, so I haven't got that tax document. But hopefully not. Some of the other exchanges are a little bit more lax on that. However, being lax, you're kind of at risk with, you know, the trust of that exchange. Whereas GDAX, for example, is invested, you know, has investors in Andreessen and Horowitz and some other really, really big names. So there is a trust factor there. Yeah. Anybody else? You guys in the back? You guys want to do some jumping jacks?
How much does it take to get up and running on something like this? Is it like a open source spread? Or
Yeah. I just pushed the code up this morning, so you can check it out on my GitHub. Definitely looking for, like, you know, code reviews or whatever, because it was just kind of a quick thing. Well, spread out over a month or 2, you know, just kind of whenever I got time. So yeah, it is open source. You git clone, installed your Python requirements. You can put it up on EC2. You can run it on your computer. Yeah, it's super straightforward. I try to make it like that so that anybody could use it if they wanted to. Eventually, I would like to add like a web client so you can look at your your open orders, your closed orders, your current rate of return, and stuff like that. But that's in the future at some point. Yeah. But as far as cost, since it's open source, the software doesn't cost you anything. It just costs you, your account value, or you could just paper trade if you'd like. Yeah.
What's your GitHub username?
Tcoyze, Tcoyze.
I'll put a link in the description of the video too.
Yeah. My GitHub's not the greatest, so please don't set me on fire.
Full disclosure.
Yeah, full disclosure. I did put a disclaimer on the project README saying don't use real money, because I haven't yet, so I can't really stand by that right now. But soon enough.
So what was the deal with base.py?
Base.py, that was an abstract base class for implementing exchanges. So an abstract base class, you're basically writing a contract between the library and the interface, saying this exchange must implement these methods to work properly. So some are like getting the bid, the ask, the order book, your account values, your balances, and a few other various utility methods. I also have in there, because you're rate limited, I have a should update function, which is basically like if you're polling faster than a certain time, it'll cache the results so that you don't hit the exchange too much and get rate limited or banned.
Oh, cool.
Yeah. So.
Nice.
Yeah.
Bitcoin arbitrage.
Cool, guys.
So you're running this thing right now?
Yeah. Well, I mean, it's running on the Raspberry Pi right now, which it's not very fast. But I could check the logs and see if it's opened any trades yet.
Oh, cool.
Yeah.
All right.
So you created the arbitrage.
Well, I created the program that looked for arbitrage opportunities.
Okay.
Yeah. So arbitrage opportunities present themselves at certain times in the month or the day where there's a divergence in prices between two exchanges, which is caused by various reasons: volume difference, trust in the exchange, for example. And then you act on that opportunity. And then now you have the open orders with both exchanges. And then as you're monitoring, you check your open orders. And then if the opportunity is, profitable sets your minimum profit with the decay, then you close out and you make the spread.
So what do people actually use something like Bitcoin for, and who uses it, and what do they use it for?
Well, a lot of people use Bitcoin and other cryptocurrencies for various transactions. Most people think that it's just for nefarious activities, but there are other perfectly good reasons to use Bitcoin when you're more security conscious or privacy focused. Chris can attest to that. He's probably used it a lot more than I have.
I just bought some in March before it had a huge spike, because I just was reading about it. It seemed like it was going to pick up, and I was fortunate that I won money doing that. So
Yeah.
that's all I know about it.
Well, hopefully you can stake me sometime.
Yeah.
But yeah, I mean, you could use it for Stripe, I believe, has an integration with it. I'm not sure if you're familiar with Stripe. It's a payment processor. They have a Bitcoin implementation that you can pay with Bitcoin now.
So if you're shopping on Amazon with Stripe,
I don't know if Amazon accepts Bitcoin, but if you have your own website, you can accept Bitcoin payments using Stripe. Ethereum is a smart contract decentralized chain, so you can not only just trade Ethereum, buy Ethereum, you can create smart contracts, which is part of what caused this recent coin explosion. You know, there's coins for everything. There's wood coin, you know, pot coin, Pepe coin, Pepe. And it's really cool. It's also a big downside to it as well, because it leaves it susceptible to hackers if people aren't writing great tested smart contracts. Recently, last week, there was a hack someone hacked a multi-signature wallet and stole like $31 million worth of Ethereum within a few minutes. So it's the Wild West still.
So I was just thinking about, like, okay, so maybe this is not a shopping currency, but an investment currency, but then maybe...
It's more than just an investment. A lot of people have made a lot of money from investing in it, but it has some function to it as well. Yeah.
Should and could have general use service in the future.
Yeah.
Like, that's the goal.
That's the
Right
goal.
now it's the Wild West, like you're saying, where things can just get hacked and it's $31 million in this thing.
Because
Right.
it's a virtual currency.
Right. And there's no reversal
Well, that's-
either.
Yeah, it's
You
like-
can't reverse
it's
the
like
transaction.
electronic cash, basically.
What's that?
It's like electronic cash.
Yeah.
Like once you give it away. Yeah.
It's done.
Cool. Any other questions before lunch?
I think that's it. We're about to
Awesome.
So thank
Great.
you very much, Tyler.
Thank you very much, guys.
for coming out.
Thank you, Tyler. Thanks, everyone, for your participation in Brownbag today. I'd like to invite you to Hack Night tonight, as well as the community meeting is at 5 o'clock. We usually meet over there. And is there anybody here at Game Playing today for the first time? Or
started on Monday.
anybody that hasn't had a tour? Okay. All right, so that's pretty much it. Thank you for joining us for today's Brownbag.
Thanks, Rudy.